Pulse School on RealAgriculture.com is brought to you by BASF.
Hey, Kara Oosterhuis here with RealAgriculture.com. I am here today with another Pulse School episode, and I have here with me Marlene Boersch, who is the managing partner of Mercantile Consulting Ventures. How's it going today?
Excellent. Thank you very much.
That's great. So you recently spoke at the Pulse and Special Crops Convention. You gave a bit of a lentil outlook and what we are kind of seeing out there right now. Do you want to kind of expand on some of your high points from your presentation?
Well, I'm not sure if I would call them high points this year or low points, but some of it centered around yield numbers, obviously. And at the time of the presentation, I think I used 1,048 pounds per acre for lentils, which is a very disappointing yield because last year we had close to 1,500 pounds. I think when the year started out, everybody was looking forward to reasonable acreage. I think we're talking about 4.3 million acres, which would give us a lot of export potential again. And this is really very important to our customers because we make up as much as 60% of the world's lentil production and I think something like 45% or so of all exports. So if we have a major variation in production, it matters not only to ourselves and certainly the farmers who have less to sell, but it matters a great deal to the price constellation and what people will have to pay overseas to get enough lentils. So now we have had quite a bit of varied input on the yield question. And while in the panel, most people seem to have agreed with my numbers at the time, we have since, or actually just this morning, had the model-based StatScan estimates that came in basically across the board lower than what the late August estimate was. And I think they put lentils as 938 pounds per acre, which would be extremely low. We haven't seen that in many years. I think you'll have to look back in the 20-year range to find anything like that. And obviously, it would tighten the situation quite a lot more yet. We actually did late last month quite a bit of work on yields by crop district, trying to overlay some of the moisture data by the major lentil crop districts. And we came out with some numbers that were actually not so far away from that. Now, we didn't use that number, obviously, because some of our own clients have had better yields, and especially, in the Regina Plains, Indian Head area, there were some much better yields. And we thought it was probably discounting reality too far, which is also dangerous because, again, it impacts on the price. But obviously, we are on the lower end. The StatScan number today will put lentils another 175,000 tons shorter than we heard earlier. So it's pretty devastating. So then what we tried to do is actually kind of fit that into what it does to the global lentil balance sheet. And even with our earlier numbers, we found that overall supply was down something like 20%, I think it was, in spite of Australia looking at a fairly good crop and some material coming out of the Black Sea areas. So it basically leads to a declining global production number, declining supply number, and for next year also declining ending stocks numbers. We're probably looking at a global reduction of about 20%. So even the Australian production, which by the way looks very, very good again this year, they had a very good year last year. They produced about 800,000 tons. And this year they will probably have 650 to 700,000 tons, a little bit less because last year was just so extraordinarily good. But it's not enough to make up for the big shortfall here. As I said, we make up about 60% of global production and 40% or so of the traded lentils. So there's no way to make up for that. Russia probably has about 100,000 tons on the lentil side. They have more peas, but on the lentil side, that's probably it. And Kazakhstan's production has actually been falling again because they have been going into other crops as we see here too, as wheat, canola prices or rapeseed prices increase, it's harder to increase pulse production. So everything is tightening up, and I think it might probably, if our numbers are correct, it will take us a couple of years to climb out of the tight situation for lentils this year. And we have seen it reflected in prices, certainly.
So what sort of model do you look at? How many years do you think it could actually take to come out of this?
Well, we have to overlay all this with the demand numbers. And if anything, as we all know, pulse demand in general is going up. It has to do with a whole number of factors. First of all, it's a good thing to grow. From a sustainability point of view, pulses are one of the crops. Consumption in general is going up. Consumption period, because we're looking at countries like India, China, some of the big population countries, Africa, they're increasing, and those are some of the pulse or the plant-based proteins that people consume, still the cheapest protein there is, even at our lofty prices. And so we are seeing increased consumption, and this year, because of the decrease in Canada, decreasing production. So I think we'll come out of this year with very tight ending stocks, both on peas and lentils, and it will take a couple of years to build that up. Because I see in Canada, we look at canola prices and durum prices, for example, in the lentil areas. Those are also showing very strong prices. So normally in very high price years, we expand acres, and I think this year that will be difficult to do. And we're also still worrying about moisture for next year.
Absolutely. And as an analyst, what do you look, obviously if demand's there and supply's short, you're looking at that price just continuing to drive. What are you expecting for the winter months?
Well, actually, at the moment, what we have seen over the last week, prices have pulled back just a little bit, other than maybe for French greens, which are at the peak of the heat right now, simply because they're very scarce. And that is because we had some shorts in the market. Some of the production numbers didn't come in as the contracting companies or exporters had expected, because the material just wasn't there. The yields were too low. And some of them had to cover very hard against that shortfall in order to service the sales they had already made. Now we're at a point in time or a situation where we'd like to make new sales, actually, but at a much higher prices. And it takes a little while for buyers to figure out, is this really what is needed? Or is it a temporary situation? I personally think they don't have a lot of other places to go. People have already been shopping from the Asian countries in Australia. Old crop there is virtually sold out. And their farmers see what ours see, that prices have been strong and they don't exactly have their selling boots on. So they are kind of holding off. And their new crop won't come on until October, November. So there are not a lot of places to go to. Black Sea is selling some, but as I said, the volumes won't be enough. But again, it will take a little while for buyers to figure out what does it take to get the bare minimum of our supplies and where can we go. Personally, I think farmers are not ready to sell. They have sold what they want to sell right at harvest at good prices, and I don't perceive them to want to sell at lesser prices now, particularly with the small production and small yields they have been able to get. So demand will certainly be curtailed to some degree by the height of the prices. But again, I don't think there are a lot of places to find alternatives from. So it will be a bit of a waiting game, but I think the price will stay where it is. Will it go a lot higher than that? I always caution people, we have seen it on durum, short covering really fuels the market very quickly. Once that is covered, you have to get back a little closer to the new normal even. So prices are very, very high. And luckily, it compensates for some of the yield shortfall. I don't see them falling in the next while, while being able to buy volume, certainly.
And when you're talking lentils, are we seeing shortage in both greens and reds? Is there more extreme on either side?
No, I think they're both quite short. The green lentils are short because the main suppliers there are the United States and Canada, and we both had the same drought. So that's what the green lentils are suffering from. And the red lentils are seeing a lot of demand by India, Turkey as well, lowered tariffs, and it's become a bigger crop than the green lentils in any case. And again, there's no shortage of demand. They're both equally tight, I think.
Okay, any other messages you'd like to send to producers right now?
I think the high prices will be a little bit of a savior vis-a-vis the shortfall. In the end, don't forget to sell at record prices. And I think we should look to the dairy market as a little bit of a lesson, because prices there will certainly stay very, very high. Will we get back to $22 a bushel? I'm not quite sure, because we are quite a ways away now from the numbers being traded in Europe. Prices are very strong. In the end, you'll have to pull the trigger at some point in time. Don't forget to do that.